Hello, my name is Bob Thelen. I'm a junior in the AIM program covering international industrials, and today I'll be talking about Toyota, ticker TM. Toyota Motor Corporation is a major producer of personal and commercial automobiles sold around the world. The firm manufactures and sells vehicles through its extensive network of dealers. The firm also offers financial services allowing customers the opportunity to finance their vehicle purchases. As of March 2020, Toyota has had $488 billion of assets. Nearly 90% of revenues are derived from the sale of personal vehicles and 7.3% from financial services. Toyota's largest markets are Japan, the United States, and Canada, while other markets each make up less than 10% of revenue. Toyota was founded in 1937 and is headquartered in Toyota, Japan. Toyota Motor Corporation is one of the world's largest auto manufacturers and best-known brands. They have garnered a significant market presence in Japan and North America while also competing successfully in other smaller markets around the globe. Toyota sold 2.1 million vehicles in North America and 9.5 million vehicles globally in 2020, which is down 11.3% from 2019. Their financial services sector provides customers with an easy and convenient financing option. From 2016 to 2019, Toyota grew revenues at a 4.83% CAGR from approximately $236.5 billion to $272.5 billion. Sales were negatively affected by the COVID-19 pandemic in 2020, with a growth rate of only 1%. Although Toyota has only a limited electric vehicle offering, they are investing heavily in EV's future, as well as alternative fuels such as hydrogen. Toyota is working towards an aggressive goal of globally selling 5.5 million EVs per year by 2030, and they intend to be carbon neutral by 2050. Toyota's share price hit a low of $108.62 in mid-March 2020, but has since rebounded to $155 after above-average sales figures during the pandemic. Because of the growing EV industry, Toyota's global brand recognition, and its technological developments, it is recommended that TM be added to the AIM International Fund with a price target of $178.10, representing an upside of 15.07%. Toyota's first driver is a growing electric vehicle market. The electric vehicle market is expected to grow at a 22% CAGR from 2021 to 2027, with a projected market size of $802 billion. Toyota currently has a 40% market share in the alternative fuel vehicle market, including a 75% share of the fuel cell market and a 64% share of the sale of hybrids and plug-ins. To take advantage of this quickly expanding market, Toyota is currently evolving its electric vehicle and battery technology to compete with brands such as Tesla and Volkswagen. They are also currently working with other firms such as Exxon to develop a standardized charging network across the US and Asia. By fully embracing EVs, Toyota will gain an advantage over other traditional automakers during the transition into a fully electric auto industry. Toyota is expected to capture a 15 to 25% market share of the pure EV market, resulting in revenues increasing approximately $160 billion. Toyota's second driver is global brand recognition. Toyota has been in the global automobile market since the 1960s and has a reputation of efficiently producing reliable automobiles. This provides Toyota with a large advantage against its competitors in many markets. The firm is also introducing numerous new electric vehicle and alternatively powered vehicles into its lineup. Toyota also has a major market presence in developing markets such as India, Southeast Asia, and the Middle East, with affordable and reliable vehicles designed to increase their market share from 20.8% to 30%, increasing revenues $26.1 billion. Toyota's final driver is efficiency of production. Toyota is one of the world's largest automakers with a diverse product lineup. They have always valued efficiency throughout the production process and implemented their own quality control system to maximize product quality and production efficiency. Toyota has access to a vast amount of technology and experience to ensure a competitive advantage against other firms through its Toyota production system. This advantage can be utilized in a pivot towards introducing a range of EVs with an improved gross margin that competes in cost and performance with gasoline and diesel vehicles. The successful evolution of this process will increase Toyota's gross margins by approximately 9%. Moving on to valuation. To reach an intrinsic value for Toyota, A 10-year DCF model was created using a terminal growth rate of 2% and a weighted average cost of capital of 4.74%. A per-share value of $164.27 was reached. A sensitivity analysis of the terminal growth rate and weighted average cost of capital plus or minus 100 basis points ranged from $153.71 to $192.04. Additionally, an EV to EBITDA multiple valuation was calculated using a weighted average peer multiple of 11.07, resulting in a relative value of $226.68. Finally, a price-to-earnings multiple valuation was calculated using a weighted average peer multiple of 10.32, resulting in a relative value of $171.03. By weighing these models 60-20-20, a price target of $178.10 was reached, representing a 15.07 upside. Toyota currently pays a dividend yielding 2.5%. Risks. The first risk of Toyota is the slow initial adoption of EVs. While Toyota was a market leader when launching the Prius in 1997, they have not developed a diverse EV lineup, citing low costs and sustained consumer demand for gasoline cars. Toyota is currently working on a global EV lineup, but its goals are still behind other automakers such as Volkswagen. The second risk is COVID-19. A second wave of the virus or a prolonged economic slowdown would have adverse effects on both sales and production of vehicles. This would limit the growth of Toyota's personal and commercial product lines. The third risk is fuel cell vehicles. While it is important to investigate different types of alternative fuel, Toyota has spent significant time and cash flow developing hydrogen fuel cell technology with vehicles such as the Mirai. Research shows that hydrogen fuel cell vehicles are much less energy dense than batteries for storing electricity, and Toyota must pivot away from HFC development and focus on battery electric vehicles. Finally, management. Akio Toyoda has been the president of Toyota since 2009. He has also served as a member of the board beginning in 2000. The chairman of the board of directors is Takashi Uchiyamada. He was appointed vice chairman of the board of directors in June 2012 and then chairman in 2013. Thank you for listening to my presentation. Please feel free to contact me if you have any further questions.